Hi, I'm Jennifer Thompson, and today I'd like to talk about investments, different kinds of investments, ETFs and mutual funds. For a lot of people, ETFs, mutual funds, is just all Greek to them. Well, today I'd like to break it down a little. So ETFs, also really known as exchange traded funds, are very similar to mutual funds in that they both are a basket of investments. They both are a basket comprised of investments. What's in that basket is dependent on the mandate of the manager, the group managing the ETF or the mutual fund. So if it's an equity, an American equity ETF or an American equity mutual fund, what would be in that basket would be stocks and shares of American companies. A bond ETF or a bond mutual fund will be a basket of investments comprising of bonds, individual bonds. So ETFs and mutual funds are really a basket of investments. When you buy an ETF or you buy a mutual fund, you're really buying a basket of investments. Some of the biggest advantage to investing in an ETF or a mutual fund is that you get diversification right off the bat, because right off the bat, if you bought an American equity mutual fund or an American equity ETF, you have a whole bunch of American stocks and shares. You don't have, whereas if you bought them individually, they'll cost you a lot more. But ETFs and mutual funds are a great way of getting instant diversification at a very inexpensive cost to you, the investor. So there are also balanced ETFs. Balanced ETFs might comprise of both bonds and stocks, so just like balanced mutual funds comprise both bonds and stocks. And right off the bat, you've got quite a balanced portfolio if you invest in ETFs and mutual funds. So they're really advantageous because they're a great way to start investing at a minimal cost to you. Whereas if you were to buy individual stocks and bonds, they would, to get a diversified portfolio, you'd have to invest quite a bit of money. So ETFs and mutual funds are really a basket of investments that you can enter at an inexpensive cost, and you can get out of them quite often without huge penalties, and sometimes with no penalties at all. So how are ETFs different from mutual funds? Well, first thing is, by and large, ETFs, the fee for holding an exchange traded fund, the management fee, which is what you're paying for a group of people overlooking or either actively or passively managing the basket of investments. The management fee for ETFs are substantially lower than the management fees for mutual funds. Over the last few years, ETFs have grown exponentially, primarily because the management fees on ETFs are substantially lower than mutual funds. Mutual funds have had quite a bad rep because there's so many embedded the expense ratio, the trading fees. There's so many embedded fees in mutual funds that they have come under a lot of negative press and comments. And in fact, in some countries, these fees are discouraged even by legislation. So that's how, that's one of the biggest difference, is that ETFs generally are very inexpensive management wise, and mutual funds have way more embedded fees and tend to have higher management expense ratios. So that's one big difference. The other difference is that you can buy, ETFs are traded on the stock market right exactly at the time you purchase. You get what the cost is right at the time you purchase it. Whereas with a mutual fund, when you purchase it, you are given the price of the fund at the price by the end of the day. so at the close of trading time. So whereas an ETF trades a lot like an individual equity, an individual stock or bond, it trades like an individual stock, because when you buy an individual stock or share on the stock market, you pay for what it's going at the very time you're purchasing it. And so ETFs trade that way as well. But mutual funds, on the other hand, you pay for the closing, what the mutual fund is trading at the cost, or the trading at the end of the day, so the closing. So that's where they're also different. In ETF, you can actually see the time and how much it's going to cost you to buy that. What's it trading for at that very minute? Whereas a mutual fund, you don't really know till the end of the day. So that's another big difference between an exchange traded fund and a mutual fund. Most countries now offer ETFs, exchange traded funds, and if you don't have a lot of money, investable assets to get in and start investing, I would encourage you to start investing in ETFs. You get the diversification you need. There's so many types of ETFs: bond ETFs, corporate bond ETFs, government bond ETFs, global equity ETFs. There's such a huge range of ETFs that you can purchase. Ensure that they are aligned with your objectives for investing and the outcomes you desire, as well as your time horizon and your tolerance for risk. So that's the difference between ETFs and mutual funds. If you'd like more information, please feel free to write your comment below. Click like, subscribe, because I will be talking a lot more about different kinds of investing. I'm Jennifer Thompson, and here again on Investing 101.